Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 1st of September. Starting off with the FTSE 100, and here we managed to bounce off the June uptrend line there, 91.80, in fact, the low on Friday, 91.79, so only 1 point out, and we have bounced. The view at the moment, though, is that, let's say the line is actually like that, and we're fitting the recent price action to it. So above 91.80, looking for obviously a retest of the record levels there up to 93.57. That resistance line projection there up to 93.70. Best case by the end of, I suppose, next month now would be 95.20 at the top of that rising June trend channel. The red line there is almost like an intermediate line. We nominally bounced off that support line there. That's obviously there was an overshoot on Friday, but let's say we've actually bounce there above 91.80, looking for the mid 93s. The only negative, I suppose, I've noticed, which I've actually noticed today, is that we are about at 600 points above the 200-day moving average. The last time, or ahead of a tumble, we were actually around 500 points above the 200-day moving average. So in back at the beginning of March, the 200-day line 8,300, the price of the FTSE up to 8,900, so that's 600 points up, and obviously then we crashed after that. And if you look back at some of the peaks that we've had over the past, you'll see that the market actually dived from those kinds of 500-600 points above the 200-day line situation. I'm trying to find one at the moment, but let's say there was one there. So the peak there, 6,600, the 200-day line there around the 5,800 level. So that kind of thing, perhaps a warning that we are overstretched at the moment, especially compared to the 200-day line, but also even compared to the 50-day moving average. We haven't been below that since back at the beginning of May. Moving on to the DAX, and here you can see that we've had this sort of dead price action. I suppose dead is good if you're near the highs, but just below the 50-day line there, which is still rising there at just over 24,000. We factored in that we had to test the August support area around 23,400, but hoping that this market will actually be able to stay above that. We are in a wide rising trend channel, which has been in place since the spring of last year, but one could actually say that that line there is really where the support is over the near term, and maybe we should look at that. That's the equivalent of 91.80, perhaps on the FTSE 100. On the upside, 25,600 by the end of next month could be due if we can hold current support levels in the mid 23,000s. On to the Dow, which obviously I looked at over the weekend, but totally forgotten what I said the last time. Here, though, the good news is that we managed to stay above the old 45,000 resistance, which really was a big barrier. Above that, looking for the top of the rising trend channel from May last year, 47,500, perhaps as soon as the end of this month, especially given the relatively strong looking RSI setup that we got there, two RSI rebounds, well above neutral 50 over the near term. Onto the cryptos, and it may be a case of a bit of a division there between the situation at Bitcoin and the situation at Ethereum. But here we're still bumping along the bottom of the rising trend channel there from March. Not exactly clear where that is, because obviously the market doesn't tell you that, but looks as though we're near the low of the channel there, 109, already been down to 107, which is what we expected to happen. And here we've got that falling RSI support line around the RSI 37 area. So this market trying to find its feet, presumably all those companies with the Bitcoin treasury strategy buying Bitcoin in frenzied amounts, given that it's some 15% cheaper than the high at the moment, and looking for that resistance line there from last month, around 110 to be broken on an end of day close basis to give us a move back to the 50-day moving average just below 116. On the downside, hoping that 105 and July support will be the lowest that we have on this particular move, although that may be a bit optimistic. The situation in Ethereum is next, and here you can see that we are holding that rather steep sort of support line there. We've also had, what's that, basically four RSI rebounds at the neutral 50 level since the beginning of last month. So it looks as though that red support line there from back in July is holding. The moment that level there around 43.20 and above that, we are and we have been looking for up to 5,500 by the end of this month. But it just take a few days to push through to that level if we get a bit of a positive setup in terms of the fundamentals. RSI is at 54, so in a great place for a move to the upside. And just to complete the detail there, you could argue that we have that red channel there heading towards 5,500 as well. So sort of double confirmation of the potential trajectory towards 5,500 by the end of this month. Ideally, obviously, we stay on the right side of 4,000 or 4,100, ideally, which was the old December resistance. On to gold, and here we've had decent hope since this market broke 34.10 and that resistance line there from April. That's still a key feature on this chart. In fact, that line now down to 3,400, so above 3,400, looking for 3,800 perhaps as soon as the end of next month. Not quite sure what would do that, but the charting has that kind of trajectory, and at least while we're above the 50-day line and the floor of that channel there from April, 33.50, we are in bull mode, very much in bull mode on gold. Moving on to the stocks and starting on with Artemis, where even just the threat of a presentation later in the week, I believe, from memory, it will be on the 5th of September at 10 a.m. Don't miss it. Be there, be square, etc. Here we've got Artemis having a decent multi-day bounce of a rising 50-day line. That's a leading indicator on the upside. We already had a gap close buy signal at the end of July. And so the combination of all those things and nice blue candles as well suggests that we'll have a breakout of the falling trend channel there from August, and it will hit as high as 0.57 or 0.58 by the end of this month. Punchy call, but it's a punchy chart. And as you can see there, we've had an extended RSI 50 rebound since the since the end of July, something which looks all the more impressive. And the other final point to note is that lots of explorers, developers are now starting to look rather bullish, which is probably the first time in many years that they have actually started to outperform the market. Normally, you have CEOs of those companies saying that the good news and the big re-rates about to come, but this looks like it'll actually be it, which is backed by the fact that none of them are actually saying that anymore. It's quite interesting. They've actually stopped saying how wonderful the forthcoming super cycle will be. Upside valid here at Artemis, while we're on the right side of 0.3 pence, recent broken resistance. Moving on to Carclo, which seems to be a sort of classic proper business and proper situation. Here we've hit the top of that rising trend channel. Our target there was 56 pence, as you can see from the line, and looking for an end of day close through, or an end of week close through 56 pence to give us the next target up, which would be 80 pence plus, presumably by the end of next month. Ideally, we stay on the right side of recent resistance around the 50 pence level. And looking at the latest news, I think it was of a very positive nature, Carclo swinging to an annual profit. So we all like that. Moving along to Chill Brands, where obviously nobody guessed that there was going to be a decent announcement today, nobody at all, which is why the shares have been going up for the last 2 or 3 weeks. In fact, on Friday, we broke the key resistance there at 1.7 pence, and the shares were up a decent amount today. It looks as though all the people who bought on Friday have actually got out. Top of the channel there, up to as high as 3.3 pence, which is the end of month target, presuming that the people who've got out today will hopefully inspire other people to get in. Rising trend channel there based at 1.75 pence, and so above that area, looking for 3 pence plus by the end of next month. The other thing to note is that looks as though the 50 and 200-day lines are just about ready to start rising if they're not already doing that at the moment, which suggests we're in the run-up to a golden cross. So a much better look there at Chill. The very keen buying ahead of today's news notwithstanding. Critical Mineral is next, and here we're trading either side of our fourth or fifth target there, which was around 3.8 pence. Above that, we're looking for a final target there, maybe as high as 5 pence by the end of this month, and looking for that hopefully to equal, then the shares would equal the 2023 resistance for the shares. But certainly we're on the right side of the three and three quarter pence area, looking for 5 pence on critical mineral. On to another stock which is proving that there are signs of recovery in the space. The Earth Scratchers, here we're breaking out of the falling trend channel there from back in 2024 on the Galileo resources chart, 1.1 pence. Looking for the shares to hit the top of that broadening triangle from back in 2023 at around 1.5 pence. And looking for that to happen by the end of next month while we remain on the right side of recent broken resistance at a penny. Onto a stock which I hardly ever look at, but this may be the time. Genel Energy. Here we've had a beautiful second time lucky break of the 200-day moving average. That's there at 62 pence. And looking for the shares to fill the gap up to 71 pence. If we can do that, then we're looking for the shares to hit as high as 90 pence by the end of next month. I'm not sure what would do that, but it does look as though with the unfilled gap to the upside and the break, sustained break of the 200-day moving average, we are finally on our way in terms of a proper upside move. The RSI rebound above the 60 level, at the 60 level, which is also quite encouraging. Another gap to fill actually there up to the mid 80s. So let's see if we can achieve all that. On to Greatland Gold, which I suppose you could describe as the old Wishbone Gold. And here you can see that we've got a decent setup. We've got a bear trap island reversal, so gapping down for the shares basically at the end of July and then gapping up today. That you normally see at the low end of the range. So when you see at the higher end of the range, normally means a significant turnaround. Looking for an end of day close above the 50-day moving average 295 to give us an initial target there to fill that gap up to 326 pence by the end of this month. Ideally, we stay on the right side of recent broken resistance at £2.75, and ideally we stay on the right side of RSI 50, which we've just broken, to hit the 57 level in the run up to a move up to the 326 area. Moving along to the situation at GCM Resources, where I was offering gushing praise for the shares back in July, and obviously they responded by heading back down to 4 pence. But it looks as though it'll be second time lucky in terms of that sustained break of the 5 pence level, looking for 10 pence by the end of this month, or hopefully much sooner, now that probably a few weak hands have been kicked out just below 4 pence. On to one of the greatest calls ever made here on the Bulletin Board Heroes, largely because it was 2 days in a row, on Wednesday and Friday. Here you can see that we've got Hemogenyx, which actually was first spotted back in July, around that level, around the 140s, somewhere around that on the 21st, 22nd of July. Since then, though, we've had 1, 2, 3, 4 targets hit, and we've got the fifth target now, which is the most ambitious one. That's heading for £9.26, and we're looking for that by the end of this month, while we remain above today's intraday low at £5.82 on an end of day close basis. But looks really good there. And in fact, one could even say that the target there is a bit higher than that, but we're just going for a modest £9 plus target there by the end of this month. Obviously, there are fundraising and other issues to grapple with, but on a charting basis, looks great. On to Pensana, and here, a situation which has looked great for quite some time. Here you can see that the shares have actually exceeded the top of the channel there, which was around the 118 pence level, and come back. I suppose the next thing to do is actually try and work out what the next level up would be. The upper parallel of that rising trend channel currently heading towards £1.60, and we'd be looking for that probably by the end of next month to be conservative, and looking for that while we remain above the top of the channel there at around the 108 level, so above that 108. Looking for 160 by the end of next month as a best case scenario target. Obviously, we've already done very well, and no one should quibble. On to the last two. The first one is Smarter Web, where the name of the game is trying to work out where the shares will find a floor. The stock is now, or the RSI is now back at the oversold 30 level, has been. And the issues here are the first one is the falling 50-day moving average. The second one is that resistance line there from back in July, currently around £1.30. So we need at least an end of day close above that to snap the downtrend that we've had recently. The best case on the best case scenario now would be an end of day close above £1.30, leading to £1.70, the old July support. On the downside, we've got the old May resistance there around £1.10, and then below that, the 200-day moving average at 82 pence. The problem is that many of SmarterWeb's contemporaries have already gone below the 200-day line, so that makes the situation here look a little bit more negative than just the stock bouncing at the 200-day line or at the old May resistance of £1.10. But let's hope £1.10 will at least deliver some upside for the shares at some point. Moving on to the last stock, which I thought was an impressive RNS today, first sort of concrete delivery for ValiRx that I can remember, probably that anybody else can remember as well. The other point to note from the chart is the way that we are back above the 200-day moving average for the first time, believe, since early, well, it looks like early 2022, which is obviously quite an achievement. The current situation is that we've broken the 200-day line. That is around the 0.668 level, and above that, on an end-of-day close basis, looking for a penny or even 1.1 pence by the end of next month. So that really would be quite an achievement. The other positives here is the way that we've got the 50-day line rising at 0.058, and also the rally here started with an unfilled gap to the upside. So maybe somebody successfully guessed today's positive news from the company. So hopefully a transformation there after many years of pain and suffering and tears, etc., etc. Upside value while we're above the recent broken resistance on the 50-day line there at 0.058. That's it for me today. More updates tomorrow.